Hey all, welcome to ShareTreck. This is Raj here. I lost track of time, my friends, and I was kind of preparing for today's session, and here we are. Really apologize for the delay. Just give me 1 second. Let me get my bearings. Good morning, all. Sorry for the delay. I have so much to talk about today, and I got lost in organizing my thoughts, and I'm late by 5 minutes. Sincere apologies, but we'll get the show going. We are looking at a whole lot of red in the futures when I look at the homepage of CNBC. And the other thing I'm looking at is a whole lot of chaos. I have some friends in Ireland. I used to live there and work there, and I was talking to them, and they were saying that it's a tradition to for the Irish Taoiseach or Prime Minister to visit the US President on St. Patrick's Day. And this year, most of the Irish people did not want the Prime Minister to go and visit Trump. But he went there anyway, and he got a lot of tariff on him, and he also got roughed up kind of during the meeting with Trump. I think at this point of time, most of these heads of state should realize that, if they stay out of the sight and attention of Trump, the better, because the moment he notices something, then he has to do something about it, and that creates more dysfunction and problem. At least that's the way it looks from here when I'm looking at the markets, when I'm looking at my portfolio, and I'm looking at the headlines. So this is where we are. And I think the dead cat bounce is over. Probably it's over, and all the other problems that we had continue to remain. Problems remain, and they're multiplying. Okay, I have a few exhibits here for you. The first one I want to talk about is Walmart. Retailers are saying that the tariffs are already hurting them. Now, in case of Walmart, it's very strange. It's like an addict going to a dealer and getting berated because the addict doesn't have money. I'm just giving you a rough analogy. What's happening is that Trump is asking Walmart not to pass on the tariff cost to the customers, and Walmart is asking China to absorb the tariff, and China is saying nothing doing. We are not going to do that. If you force us to absorb the tariff, then we have all options on the table, which is a very threatening statement from China. So this is the first piece of information that I wanted to share with you. I have two more exhibits out here. The third one I'm going to talk about later. Google's DeepMind is a separate thing I want to talk about. American Eagle says consumer is slowing down and issues weak guidance. This is another retail angle that I'm talking about, because all this economic data that we have seen so far, they are all old data. They're all coming from January and probably around that time frame, and they are not yet impacted by this Doge cuts, because the Doge cuts are a lot of cuts, not only in terms of staff, which I have already mentioned, have had a domino effect on private sector, which are servicing those departments and those staffs. Think of places like diners who are already suffering from the high cost of eggs. Eggs are the basic ingredient for any diner or any eating establishment, and that's already expensive. So they must be eating a lot of their own costs in order to stay in business. On top of that, there's a double whammy. So all those unemployment data and all those drop in demand and all those drop in GDP is not yet coming, and it's going to come in the next economic reading that we will see, whether it is for GDP, whether it is for employment, or whether it is for unemployment. All of those numbers are going to come. So the worst is yet to come, right? So at this point of time, the relief rally was just something that the market wanted to break the steep drop, and that excuse was given, and I think that party is over. Now look at the other aspect out here. US budget deficit surged in February, passing $1 trillion for year-to-date record. Now that is huge. That is a huge one. In 2 months, they have already done $1 trillion deficit. So Doge is running around like a headless chicken, cutting anything that it can see. And in the Congress, there is a lot of heated debate and discussion, and they want Elon Musk to appear in front of the Congress to answer. And if social security is cut, a lot of old people and a lot of retired people who are depending on social security, first of all, they will probably, some of them will be on the streets homeless, and there will be others who are not going to get their basics met. They may still have a shelter, but they are going to depend on food banks and things like that. And all of that is going to reduce the demand, and the economy is going to shrink. So that's a big problem out there. And I think that at this point of time, US wants the yields to be down so that they can refinance the bonds. But if you look at the bonds, the bond yields are kind of going up at this point of time. So US government will have to do something to improve that. The world is looking at US as an unstable entity and in the verge of being a rogue entity. Actions and the dysfunction in the US is weakening the appeal of US dollar as a reserve currency, and this is going to lead to strength for gold and silver. And I have one more exhibit that I want to show you. That's going to be the purchasing power. So I picked this up from Threads. Here is what it says. There's this chart out here. Let me expand this a little. I can't do that here, can I? I would be able to, yeah. It doesn't allow me to expand it. I'm going to open it this way. As you can see here, this is the chart that I saw on Threads, which shows that US equity mutual funds do not have any cash in hands. So they are not going to be net buyers, and if they do anything, they might be sellers. So where is more money going to come in to pick up the market, right? So I'm thinking all in all, it's not looking that great. So having said that, I want to talk a little bit about the inflation components. And the latest inflation component shows that eggs have gone up 58.8%. Eggs may be a small thing, but it's a foundation of protein. That was the cheapest protein that was available to most people. And it is part of any baking that you do, which is a staple for Western diets. So egg prices have got to come down. And if egg prices have to come down, the US has to depend on science. And I think at this point of time, they're not looking at science, right? So the first thing they have to do is reduce the cost of eggs. And they got a lot of relief due to oil. Basically, fuel costs have gone down significantly. And as a result of which, they have been able to have much better inflation reading than it would have been otherwise. But fuel costs are also, if you look at energy, the fuel costs are going to be something that is determined by geopolitical aspects, and we still have attempts to resolve the Ukraine and Russia conflict, and we still have the Middle East simmering. There is competing ideas for resolving Palestine. So if any of those things flare up, or if China decides that this is the right time to go after Taiwan, then I can easily see oil prices going up. And we have this tariff war going on where Trump has imposed a tariff of 10% on Canadian oil. Canada supplies a whole lot of oil to the US. So I'm thinking that it's going to create a lot of problem in this part of the inflation report, which has helped the inflation to stay a bit tame, because combined with the tariff effect that will come into this in the next reading, we already seen what Walmart has said and what American Eagle has said. We have seen all those things. So I'm not thinking that inflation is going to look tame going forward. So we can kiss goodbye to any reduction of interest rates by the Fed. And therefore, the bond vigilantes will start acting up. Sorry. And then if you look at the news, I don't see anything positive out here, except gasoline prices are coming down. Trump's drill baby drill promises are not the reason. The problem is that fracking has got a price point below which it is no longer viable. So Trump can say all drill baby drill that he wants, but oil industry is going to base itself on economics. When oil price falls below a particular level, it's only going to help Saudi Arabia and maybe countries like Iran, who have got really rich oil fields which are easy to exploit and the production cost is less. But if you look at some place like US or Canada, it doesn't help. The oil price going below a particular level will cause some of these oil plants, oil companies to shut down some operations in order to avoid losses. So that's what I am seeing out here. So this headline, even though it looks good right now, I don't think it's going to last for a long period of time. So overall, I'm not happy. Look at this dysfunction out here. Rapid fire EPA regulation rollbacks announced in press release filled with typos and placeholders. You would expect this kind of a thing in a banana republic, not from the United States. So all of these things put together are making the whole world think that it's a dysfunctional place. Look at this out here. This is for funding. Every 6 months we have this drama of funding, and we are, $32 trillion in deficit. Things are not looking that great, friends. Now let's go on to economic news. 8:30 a.m. we are going to look at PPI. If PPI goes up thanks to tariff, then I think the Fed is going to be hawkish, and it's going to make the markets go down because future sales and other things are going to take a hit, earnings are going to take a hit. So that's the way I'm looking at it. So we'll see what happens at 8:30 a.m. when the PPI comes in. If the PPI comes in weak, I would say that we'll get another excuse for a dead cat bounce, but it's going to be short-lived because all tariff-related issues are going to come in unless Trump decides to put himself in a straitjacket and gag himself and avoid uttering a single word. Then the market can get a bit of a respite. Otherwise, we can say something or the other and the market will go into a tizzy. Now let's look at the futures. Nasdaq futures are down 0.47%. We have a resistance out here at 19,744.50, and this entire area which was shaded green, I think it should be shaded red because the whole thing is a resistance. And I'm going to do that right now for you out here and mark this as red and fill it red. So we are below that and we have to break through and go above it in order to make any progress. So the first challenge is to break through above. I will give you the number, 19,545. We are at 19,531. So if we break through above that when the market opens, I think we'll still be on a bull channel. So it will still be okay because we have a long-term bull channel coming from a long distance away. The steep fall had to be mitigated and we have had a little bit of cooling off, and then I think we have to bounce back again. I will still say that we have two checkpoints to work on. We had to validate 19,744, break through it, and then we had to validate 20,047, break through it, and then break through the 200-day exponential, which is sitting at 20,256.36. And I would then say that, okay, we are starting to look seriously bullish. And we have to create a series of higher lows and higher highs. And once that happens, we'll be firmly on this diagonal line of support, and I'll say that we are bullish again. Right now, it doesn't look like that to me. And then we look at S&P 500. S&P 500 is down 0.24%. We still haven't met our reverse head and shoulder target of 5,517. And I'm thinking that we are most likely to do that before going up again. And right now, we have got a moment of indecision waiting for the market to open. We are down 0.26%, and I'm thinking of all the overhanging problems that we have in the background and the tariff issues which are still not resolved. So something or the other, bad news is more likely to come out than good news. Market is looking for good news as an excuse to bounce back, so we will have volatility and the general trend is going to be down. Dollar index is going up. And if you look at the 10-year yields, the 10-year yields are marching up, and this is exactly what the US government doesn't want. The refinancing is going to become expensive with this, and we have this line of resistance which is coming from a long time. There's the 100-day exponential moving average out here, and it is pushing down the yields. And I'm going to draw another line out here. I have a new theme for you guys to consider, and I want to get your feedback on that. So I'm going to draw this channel out here. I'm thinking that after hitting this channel, it will start coming down again. And I'm going to draw another channel out here, which I think is a new bull channel in the making. The validation will happen in the next few days. If we break out from this diagonal line of resistance out here, if we break out of this diagonal line of resistance out here and start making higher lows and higher highs, then I think we are looking at a raising yield environment, which is something that the US government is not going to like. Now, having said that, I want to move into the next segment, which is indicators. S&P 500. So when I look at S&P 500, I am seeing that this diagonal line of support has been breached and we have come back down again. So it's again a diagonal line of resistance, but I'm not going to change the color today. I can see that S&P 500 ended up 0.49% in the yesterday during the end of the session. And if you look at the futures, S&P 500 is down 0.21. It's at 5592.75. So if we go into the indicators, 5592.75, and where is 5592.75? It is somewhere out here. So we are bang on top of this diagonal line of support. So I'm going to hold off my judgment on this, but I think the general direction is downwards. We had a little bit of a dead cat bounce, but I think that on S&P 500, there will be further regions where we have been in the past. I'm not going too far into the past. I'm going to take this level out here and draw a line of support. I'm going to make this line a little thinner. So I think we have potential of going all the way down there before we get into a situation where we see that, just give me 1 second. I'm not able to roll it up. So in other words, I'm saying that we can still go down further on S&P, but the steepness of this drop is unsustainable. So we'll have a little bit of consolidation, but the general movement is downwards until we get confirmation that we are moving up. Again, same story I would say for NASDAQ as well. All the movement that we got on NASDAQ has come from the Mag 7 semiconductor and Tesla, which were moving it up. And today I think the story is changing a little bit. We still have this diagonal line of support which will try to hold us up. We are at 19,596 as of yesterday's close. And if you look at the NASDAQ futures out here, we are at 19,550. So if you look at 19,550 and go into NASDAQ index and see where 19,550 is, so 19,550 is somewhere out here, somewhere in this area. So we are bang on top of this diagonal line of support today. So I'm not going to change the color out here, but generally my theme is that we might consolidate and move down until we get some really good catalyst that can remove the funk from the market and push us upward. So with that said, I would also like to point out that I have this double bottom. It's not strictly a double bottom. For a pure double bottom, the tops for a pure double top, the tops have to be on the same level. They should be identical. That's not the case out here, but I'm still using roughly as a double bottom, double top, and I have a target for the double top at 19,041. So I'd expect that that should pull it down and help us to bounce back from there. There should be a reason for a bounce back. There was no support on which we had a bounce back. Therefore, this support, I think, is suspect. I mean, this bounce back is a bit suspect. Now, let's look at the VIX. VIX is up 1.90% in pre-market trade, and VIX going up is not a good thing. So that supports the thesis that the stock prices are likely to come down. Now, Dow Jones is already down 0.20% as of the close yesterday, and it's below the 200-day exponential moving average. Everything is looking weak out here. It's primed for a dead cat bounce or a consolidation so that the oversold condition can be addressed. And I'm going to just scroll back to see how much far it has been able to fall in the past on the RSI scale, and I found a point out here which leads me to believe it could go all the way to 17.90 on the RSI scale. So there is more drops available for it to fall, but it's progressing very rapidly, and this rapid ascent has to be tempered, and it has to become a little less acute. So there could be a little bit of consolidation, a bit of move up and then come back down. So those kind of adjustment would start happening right now. And same is the story with Russell Index. It's kind of consolidating and moving sideways, but Russell Index has got a lot of small companies. It also has got a lot of zombie companies. If I was to listen to the commentators and the news articles, I believe there are a lot of zombie companies in the IWM, companies who are not able to meet their obligations and have been refinanced by banks so that they could pay back their interest. Now those kind of companies are like to crumble under the weight of the tariffs and under the weight of all these cost cutting measures that's happening by the federal government. Federal government spending is part of the GDP, and the GDP is likely to go down, and we're looking at economic contraction. So I would say that IWM is the weakest of all the indices, and it's going to come down further in future. And if I look at put call ratio, it's very neutral at this point of time. It's not looking that great. And if you look at QQQ, it's already down 0.55% in pre-market trades. Now with that said, I want to just look at gold. You can see that gold is coming back to test the resistance, which is at 2954. We had a legitimate reason for gold to bounce back up again, and it bounced back up, and I'm thinking that it's going to break through this resistance and it's going to aim for 3000. So that's 3000 is the psychological round number, and I'm thinking that we are going towards that. And with that said, I want to go and talk to you about AI. Now, I have NVIDIA out here, and I have got some ideas that I want to talk to you guys about. Now, this market seems to be going up and back down. In some stocks, that up and down narrow band is present and clearly visible, and in other stocks like NVIDIA, it's not that clear. So I'm looking at a channel out here, which is potentially another point where NVIDIA can bounce back down again. We're already down 0.03% this morning, and we have dropped below this diagonal line of resistance. And then we have another diagonal line of resistance, which we have hit 1, 2, 3, 4, 5, 6, 7 times. And this diagonal line of resistance we have hit many times. So if this line of resistance is something that's going to push us down, I think the next support that we are going to get is at 109.31. Let me quickly mark this green and mark this also green. So this is the next line of support that we have, and at the bottom we have another line of support out here at 106.91. So if that is the case, one may consider shorting NVIDIA today and selling off the shorts when you approach 109.37 and still make some money on the way back. However, if we were to break through above this, then another point where we could short could be out here, where we have the confluence of the 100-day and the 200-day exponential moving average, which is at around $121. So around that level also a short can be initiated. That is one idea that I'm considering. I would like to hear from you guys if you think that that's a very risky move or it's a good idea. Continuing with the theme, let us look at Meta. Meta has been moving down in this narrow range, and it's bounded on the bottom by this line of support and on the top by this line of resistance. And I propose that all these sharp down channels have got to moderate a little bit, become a little wider and become a little shallower. So some kind of sideways movements will happen. I'm looking at the pre-market action. It's down 0.81. Obviously, it has been pushed down by this diagonal line of resistance. So if that is the case, the next logical move for this stock would be to try and test the support out here. And in the process, it's going to encounter this 200-day exponential moving average, which is right now at 575.25, which will at some point of time arrive at 576.16 or maybe 574. So there is a lot of opportunity to make money on a short going down. So this is another thing I'm considering. I would like to hear from you guys. What is your feedback? Do you think, Raj, don't do that? Yeah, hot dog is saying too volatile for me to short. I hear you. I wanted to propose this out there and check what you guys are feeling. I have a surefire short available, which I am thinking I would do. I want your opinion on that also. Thanks, hot dog. Next, we are looking at Google. So again, Google, I have two channels out there, and this channel seems to be the viable channel. And right now, today, we have been pushed down by 169.10. Pre-market, we are at 167.50. We are down 0.89. Do we have the courage to short Google right now, hoping that we are going to get support somewhere around 164.49? That's another question for you guys. Consider this and let me know. Right now, I'm seeing there are a lot of short ETFs which are specific to stocks. There is a short specific to Nvidia, there is a short specific to Meta, there is a short specific to Google. These are all short ETFs I'm talking about, and I'm already using some of them. I have placed an order for AAPD. Apple is a surefire short in my opinion. I'm going to Amazon. Again, we have this channel which I have drawn out here. Do you guys dare to short it? I'm thinking of a short out here because we are already down 0.78% in pre-market action. And where is it going to go? I'm going to change the color out here. I think it's a wrong color just for the aesthetics of it and to be perfect. So this diagonal line of support is where we have to come back. So right now we are at 197.33, and if we were to come to the support, it's 189.25. So there's a lot of money to be made if one were to short it. So I'm thinking, Raj, do you have the courage to short it? So these are the things I'm going to contemplate once the live stream is over. And the surefire short for me out here is Apple. Let me show you the complete picture out here. I'm thinking we have reverse head and shoulder, and we have broken the neckline and we have gone down. Pre-market, we are down 0.35, and there is a short available out here called AAPD. I have put an order for AAPD at 17.62. I'm not sure if I'm going to get it or not. It's a pre-market order. If I get that, I'm expecting to ride it on the way up. And if you look at the reverse, you can see a reverse head and shoulder, and I could do a target for that. There will be a lot of money to be made out here. So this is what I am thinking about today. And then I'll go back to what is after Apple. We have got Microsoft. Microsoft again is on a channel. Same idea out here, my friends. I don't think I'll buy Microsoft shorts anytime soon. I want to see it touch one of these supports and bounce back up and touch the resistance. When it close to the resistance and it doesn't break through the resistance, that's the point of time when I would like to buy the shorts and ride it on the way back. Right now, Microsoft, I don't think is open for a short. We have to wait for it. Tesla, again, the question is, are we likely to short? I sold my shorts yesterday at 12.64 and then bought it back again at 12.16, and I think I sold it back again at 12.18 because I panicked and I sold it off before the end of the session. I regret it because if I had it with me, I would have been making money, but that was my risk appetite. So I'm going to pick up some Tesla shorts today. I'm going to ride it all the way back down here to 217.81. And then we have Oracle. Oracle again is forming a channel. It's looking much healthier than the other stocks. It's moving sideways and trying to create a channel so that it's not such a steep fall. Again, you can draw a line out here to show the resistance and a line to show the support, and use the same theme for shorting. And look at AMD. I think AMD is also a sure short, provided we get to see one of these channels acting as a resistance. So pre-market, we are down to 99.74. It's down 1.04%. And if I go and have a look at the position out here on today's candle, so the candle that you see here is for the 12th, this green candle. Adjacent to it will be today's candle. So today's candle should be at 99.37 if it has to be on top of this diagonal line of resistance. We are at 99.74. So we are still above this diagonal line of resistance. So I'm going to mark it green. I'm going to reduce the thickness of that and make it a little thinner. So for today, we are slightly above this diagonal line of support. So once it comes down into it, I'm definitely buying short for AMD. You have AMDS, which is a short ETF for AMD. That's what I'm planning to do. Again, friends, these are all my musings and thoughts. It's not financial advice. The markets are very risky and you could stand to lose a lot of money if you do things without thinking it through. Look at Intel. I think the support for Intel is out here, which is at 18.87. Unless it bounces off this support, I wouldn't put any weight on anything that I see. This is a disorderly jump up. There is a gap up out here. It's up again 10.98%. There is a whole lot of news. Yes, I have heard hot dog. I have heard about TSMC leasing. I had read about a consortium of companies which were going to use Intel's foundry. So that is the source of all this optimism that we are seeing out here. So it may find a plateau and then move sideways, because Intel will then become a glorified subcontractor. That's all. It's not the past Intel which it was, and it's not making any profits. So yeah, I've heard about that. SMCI, I think SMCI is developing a bull channel, and I have some SMCI. I'm really looking at this with a lot of happiness. It still has to break out the 200-day exponential moving average, but it has got two supports out here. The first support is the diagonal line of support that I see out here, and the other one is the 100-day exponential moving average. If it continues to give it support and SMCI bounces up today, that will be a good outcome. Even if it doesn't, as long as it bounces off this diagonal line of support, I'll consider that we are creating a bull channel. So the verdict is out on this one. Qualcomm is still on a bear channel. Broadcom is also on a bear channel. And Palantir is down 1.89% in pre-market trades. I dare not touch Palantir because fundamentally it's very, very richly valued, and I think defense budget is also going to be cut when they are cutting social security and other things with a lot of gusto. I don't see how extra business is going to come here. The only saving grace is that these are cutting edge technology for defense, and this can give multiple X leverage over ordinary warfare that we see so far, which consists of soldiers, ammo, tanks, and fighter jets and battleships. So I'm thinking that more money could go towards drone and AI-based physical AI for combat, and intelligence AI for defense. So to that extent, I think Palantir has got the scope. But with all these cost cutting and the protectionist measures, I'm pretty sure if SMCI is being prevented from selling, if NVIDIA is prevented from selling cutting edge technology to China, then I'm pretty sure Palantir is going to have geofencing around it, which prevents it from selling its services to other countries. Therefore, Palantir has got a limited market, and US has got a limited budget. We saw its fiscal situation. So I'm not very optimistic about Palantir. I'm thinking that it has got to come down, but there's a whole lot of positive cult following for Palantir, which is pushing it up. So to make it short, I'm very confused about Palantir. I'm not absolutely confident that it's going to fall, and at the same time, I'm not very confident that it can take even richer valuation than what it has right now. So I'm going to stay away from Palantir. I'll just watch it. For those who are looking for ETFs, NVDL is a long ETF for NVIDIA. NVD is a short ETF for NVIDIA. And some of these ETFs are 1x, and some of them are 2x and 3x. I personally prefer 1x because it reduces my risk to a certain extent. But if you are more adventurous, you could consider the multiple X's. So that's what I would say. And I'm looking at Rigetti. Rigetti again is down 0.11% pre-market. It's created some kind of higher lows out here in my opinion. So I'm cautiously optimistic that this could create a bull channel. SMR is consolidating out here, and if I was to look at Netflix, Again, you can draw a diagonal line of resistance out here and short it on the way back down. And I think the PE is also rich. Snowflake, again, can do the same diagonal lines. So that is the theme for me, my friends. I'm likely to go next into genomics. I'm looking at Verve. Verve is up 4.21% in pre-market after the last 2 days. I'll just put a line of resistance out here for you guys as a guideline. So when you approach this, you will probably want to put some covered calls, because if it breaks down from there, it's going to come back down here and get a support from this diagonal line of support. So that's my story out here. And this resistance is likely to be a bit stiffer, because it would also have the 100-day exponential moving average coming down and giving it some kind of, let me check this once again. I suspect that it's the 9-day exponential moving average. Let me do this. Yeah, it's a 9-day exponential. I'm absolutely sorry. This mustard line is a 9-day exponential moving average, and that's going to overlap this 6.71 out here by the time we have Verve approaching it. So it will be a formidable resistance. So that could be a point to short it and come back down. So that's what I'm thinking for Verve. Ginkgo Bioworks, flat pre-market trade. You've got a diagonal line of resistance, a diagonal line of support. You can do what I suggested for shorting out there. Caribou Biosciences, it's got a diagonal line of resistance on the top, and I would mark a diagonal line of resistance in the bottom. So I'm going to bring it down here. I'm going to just calibrate it and adjust it from this point on. So the way I would play most of the stocks in this market, where we keep on chopping up and down, is that I would try to get a channel which has multiple touch points, maximum number of touch points, and just refine it as best as possible and use it as a guideline. So I would go long near this and I'll go short near that. So buy long here, sell closer to that, and then buy short there and sell it closer to here. So that's my strategy. I'm going to try my best to have mental discipline to do that and just focus on few counters so that I don't get distracted. And when we do these kind of things, we have to be absolutely on the ball and watch the price like a hawk and pull the trigger at the right time. We can't get greedy, we can't get distracted. So that's very important if anyone was to move into this kind of trade. Again, personal opinion, not financial advice, just sharing my thoughts out here, sharing it out loud. And you look at CRISPR Therapeutics, I think this minor resistance has proved to be pretty strong. So when we come anywhere close to this, I would definitely like to DCA. And when we come closer to the resistance lines, I would like to sell it out and probably wait for it to drop back down again. That's the play I would do at this point of time. And then let's look at Grail. Grail is coming back down again, and I can confidently say that we are forming a bear channel out here. This is the top of the bear channel, and then I think this is at this point of time, I would say this is more likely the bottom of the channel. So let me mark this red and pull this out a little bit. So this is what I'm seeing here, and this line of support at 31.95 is now acting as a line of resistance for us. We have to break through above that. Pre-market we are down 0.32%, and very soon we are going to get the PPI, where is the economic calendar. So PPI, if it comes hot, then I'm thinking that the markets are going to tank super fast. But if the PPI comes soft, it could give an excuse for the market in various counters to do a dead cat bounce. But I'm thinking that the PPI is sooner or later going to go worse, because tariff impact will start coming in. I don't know if it's already trickled in as of the time of the reading, but that's what I would like to look at out there. Continuing jobless claim, initial jobless claims, all of these will start going up when the Doge numbers start hitting. Right? I don't know if it's going to come into this report because I have not studied this in detail. But if it didn't come now, it's coming in the next report. And that's what I would say. I'm going to spend a little time out here. It's around 8:29. I'm going to spend a few moments out here while I share my thoughts on other aspects. Now, looking at the state of the market, since the markets are going down, I have enough cash in my portfolio to start dollar cost averaging. I already bought my first tranche of Google, Microsoft, and Nvidia, and I'm waiting for further drops. I have plenty of cash to do dollar cost averaging into them, and I want to do the dollar cost averaging with meaningful intervals. For example, I would like to see a 5 or 6% drop before I buy the second installment of DCA on any of those stocks, so that the average cost comes down meaningfully. So on the way back up, I start getting much better profits much earlier. So that's my idea. But if you look at the entire market as such, the entire market, we saw the chart which showed you that mutual funds have got very less cash in their hands. Many retail investors have already dumped a lot of stocks, so they may have money in hand. Now we have the readings out here, PPI month over month. It was forecast to be 0.3, it is 0, previous was 0.4. So this is actually come out good. And core PPI, this is actually, this is going to give a dead cat bounce in my opinion to the market. But if you look at initial jobless claims, that has come out very well. So my friends, I think that this is going to give a dead cat bounce to the markets today. So the short ideas and all will have to be shelved away. So the first thing I want to do is go and look at the futures and see how the futures are reacting. Nasdaq futures 64, 65, 64, 65. It's not moving much out here. Let's look at S&P 500 futures. Minus 43, minus 44, minus 43, minus 44. Not much of a reaction here as yet. But I'm thinking this could give the markets an excuse for a dead cat bounce. But if the market is forward looking as they say it is, it may not take this bait. So we have to wait and watch, and we can do a little more of those genomics and then come back here and have a look at it. I'm seeing that definitely there's a tendency towards dead cat bounce. As you can see, we are going down to minus 0.41. So things are starting to look a little bit exciting for the bulls out here because of the way it has been. Now let us go and have a look at the headlines on CNBC and see what it says. Stock futures are under pressure again as traders digest new Trump tariff threat and await inflation data. Is there a live feed out here? No, live. Okay, stock futures are under pressure. Now in this live feed, we should be seeing something coming up. So the last update they did was 28 minutes ago. So they are still waiting to see what happens out there, exactly like we are. And I'm thinking that definitely we are witnessing a little bit of a dead cat bounce out here, my friends. So this should do some good. Let us go and see how AI stocks are reacting. I'm basically looking at my top targets. One is Tesla, which is my target for shorting, and Tesla is improving. It's it's also doing a yo-yo out there, so it doesn't have a clear direction. There's a lot of confusion out there. My next target was Apple. Let us see what's happening with Apple. Apple is not reacting at all. It's still at minus 27. So I think the verdict is not yet out, but overall in the indices, other shares probably might react to this. Let's go back to Nasdaq, minus 59, and this is minus 0.40. Yeah, I think it's a muted response. There is a little bit of positive bounce out there that I can see, but I don't know if it is sufficient for the market to bounce back up. Hot dog, what do you think? Do you think this PPI and the initial unemployment numbers are going to help the market jump up again? I'm thinking at the most maybe an hour of positive in the market and then back down again. What do you think? Only briefly. Yeah, I agree. I think we are of the same thought out here. So that's what I have here. and that also influences what happens to the rest of the genomics companies. So our main focus is CRISPR Therapeutics. This is a viable company. Another thing I could say is that with Grail, you could try to do the shorting and going long and going short business out here. But unfortunately, the last 3 or 4 days, the range of that has been very narrow. You have to be very agile. So I would not recommend doing that. And then I'm looking at Prime. Prime has already broken down below the line of support. So if anybody was following that strategy, I mean, it came to my mind much later, just this morning. But if anybody had been following this strategy of shorting here and going long here, they would have had some money to be made. Then look at Beam. Beam is all over the place. It's up 0.11% in pre-market trades. And we have Altimmune, which is flat in pre-market trades. Altimmune is again going down. It's still in a bear channel. Nothing great out here. Bluebird is consolidating, waiting for its eventual demise. Allogene is down 1.94%. And I really don't know whether I could call this a reverse head and shoulders because this up is really fast. Let me just plot it out for you. This could be 1, 2, 3. In which case, I think it's already met its target and it's come back down. So it's a moot point to talk about it right now. Market is still very fearful. Yes, I hear you, Hot Dog. Market is still fearful. We have this double bottom target of 44.50 for mRNA. It's not seeming to go out there. It's dropped back again from this line of resistance that we have out here at 35.38. So again, we could short here and we could go long when it comes closer to 29.71. So that's a gamble. Again, personal opinion, not financial advice. I'm going to mark this red out here. And then ARCG, it's below the line of support out here. And it's below its resistance and it's not looking great on the charts. PACB is up 1.56%. It's kind of creating a bottom out here, if I may say so. And I don't know what's happening with PACB. It's just, again, a zombie company, I would say, except that it has got really good products under its belt. And we are following this diagonal line of support for Intelia. And I don't want to be Debbie Downer, but you can see reverse head and shoulders, which could take us. Do you want me to draw the targets? Pull it out down here and put it here. We have a target of around 6.59. Okay, so this is quite possible in the realms of possibility. It's down to 0.21% this morning. Illumina is another company that I'm very keenly watching, and it's down 0.21. I'm definitely going to buy Illumina longs if I can find an ETF somewhere closer to $80, hoping to ride the way back up again. But I can't be very confident that it will come all the way up to 89.33. And I'm not sure I'll be able to find an ETF that is shorting Illumina. So that's going to remain a pipe dream. I don't have the kind of money needed to invest in 100 shares of Illumina. So with that said, IFTX, again, weak share out here, not much to talk about. Editas, I'm just going to remove this question mark. It was true, we met and exceeded the target that was there for the reverse head and shoulders. Now we are on our way back. I would have called this a bull flag. Many people consider anything that goes from a bull channel on a sideways direction as a bull flag. I'm going to talk about that when we come to Bitcoin. But one has to remember that the bull flag ceases being a bull flag once it comes halfway down the bull channel for which it is a flag. So this is no longer a bull flag. It's actually a downtrend that has already started, and we'll have to treat it as so. Now, Vertex is the other one which is on a bull channel. It's consolidating. I'm happy with that. The 9-day exponential will continue to provide its support, failing which we have this diagonal line of support which is going to help. And I think I'm not worried about Vertex at this point of time. Now let's go on to cryptocurrencies. And I'm looking at Bitcoin. And I watch other channels as well from time to time just to make sure that I have a reality check of what I'm doing, and also to get new ideas and validate them and see if it is worthwhile. So this morning I was on a channel where the person who was doing the analysis was saying that this out here on Bitcoin is a bull flag. And he was saying that we are going to bounce off from here and we are going to break to new highs. So I do not subscribe to that to an extent, because we have come a far way down already. I would rather treat this as a bear channel. I'd like to hear from you guys. What do you think? Do you think this is a bear channel, or do you think it's a bull flag? I don't think it's a bull flag. It's not a bull flag. And a bull flag, let us pull this down here, come from here, take a weight measuring widget and go all the way down to here. So this is a drop of 22%. So looking for a drop of 22% on a bull flag, I don't think that's a bull flag. It's kind of a 22% is like a correction. So you can't say that a bull flag can contain a correction. So I'm not inclining to think of it as a bull flag. Hot Dog is saying, I think it will bounce, but I don't think it's going to at the moment right away. Yeah, I agree with you. I think that Bitcoin is simpatico with S&P 500. As long as S&P 500 is going down, Bitcoin is going to go down. But there will be other factors that will impact Bitcoin in a positive manner, which will be geopolitical issues, US putting sanctions, US putting tariffs, and reducing the appeal of US dollar as a reserve currency could somehow help Bitcoin. I'm holding out the hope out there, but I don't have any basis to believe that to be true, because at the end of the day, Bitcoin again is also vaporware. There is nothing under there except an algorithm and a bit of numbers, and the fact that nobody can see that. But now people are tracking Bitcoin transactions and they know who's bought what and what not. So the anonymity factor also is not 100% guaranteed. The only factor that helps is that there will be no more Bitcoins after a certain number is reached. So I'm cautiously optimistic that all the actions of Trump is going to give strength to gold and Bitcoin, and probably other currencies will also pick up. Especially I'm looking at Euro gaining more strength. Hot Dog is saying Bitcoin dominance is certainty. I though not alt season till Bitcoin shoots up. No alt season until Bitcoin shoots up. Yeah, I agree with you on that one. I think that Bitcoin should come at least up to the 73,000 levels before it jumps back up again. Just recalibrating my chart to show you why I think so. Because this 73,000 is the point at which I think we had the last resistance that we have seen, last meaningful set of resistances. So these 2 points, I think this provides a very strong support, and if this support doesn't hold, I don't know what will. So I'm thinking that it has to bounce off of 73,000. That's my logic out there. Next we look at Ethereum, and Ethereum is still very weak, and I think Ethereum would be a point of purchase, because when Bitcoin starts going up, Ethereum will also shoot up, and it has lost a lot. It has been very weak. And if you do some kind of Ethereum Bitcoin fractions, if you do Ethereum by Bitcoin, you can see that it has suffered a lot. So I think Ethereum can bounce back faster. JPY USD, I'm still not worried about that out here for the yen unwind trade, so I'll leave it at that. So friends, that brings me to an end of today's session, and I'm going to wind up unless you have some questions that you want. Brian says, seems most assets are correlated. Most assets are definitely correlated. There is some kind of correlation between most of the assets. It's either positive or it's negative. But when it comes to gold, I think the gold has had some kind of a suppression. If you look at the central bank activities, like when the central bank starts printing more money, ideally gold should go up. I will make a separate video on that, Brian, I have some ideas that I want to put across to you. I saw a chart from Fred about consumer price index. I'm going to try and see if I can find it out for you right now. Please bear with me. So I have this chart out here, okay? So this is consumer price index for all urban consumers, purchasing power of the consumer dollar in US city average. So we are here, see this is to 2020, 2010. So we are coming from all the way from 1910 onwards to now. So at this point of time, the actual purchasing power is $31.7 after indexing it in 1910, right? And Bitcoin purchasing power is going up, right? I'm thinking that gold has been artificially suppressed somehow or the other, because there was a time when central banks were selling gold. I'm thinking that the time for gold has come again, and gold will show its true colors in due course. Let us just look at gold chart before we wind up. I'm going into the indicators. I'm going to pick up gold and see gold is picking up, and that is what makes me feel that we have to first break the psychological level of 3000. And I'm thinking that is on the cards, and this diagonal line of resistance is up here. And once we break through that, I think between gold and euro, I think most of the security or saving of value is going to happen. Reserve currency functions are going to happen between euro and gold going forward. That's what I'm thinking. Now let us go and look at S&P 500 and see if they have turned positive. Let me go to the futures before we wind up. S&P futures have improved a lot. I think they have improved a lot. We are seeing a little bit of a bounce from the PMI numbers, but I don't think this is sufficient for us. Maybe it will last for an hour or two, and after that we are going to have some statement from White House or somewhere, and the apple cart comes crashing down. That's my gut feel. What do you guys think? Can we take a quick poll? There are, I think, 3 or 4 people on the live stream here right now. We have 5 people. Can all the 5 please just give your quick reactions, and then we can wind up the show for today. If I'm almost done with everything. Brian says, agree with gold, especially given loss of trust in old world order. So much debt to refinance, hard to pay US debt when economic activity being tanked. Absolutely, agreed. Yeah, I have a video coming up on that. What are your thoughts? And Hot Dog, what do you think? Do you think we are going to have a short-lived jump today and then we are back down again? Just want to take your poll before I wind up today's session. Yes, I agree. Okay, so we are in the same. Inf, what do you think? Looks the same. I think we swing positive, then go to sell off. Yeah, so let's look out for this. And Inf, I would suggest that you look at this video after the live stream is over. I've spoken about some ideas out there. It was an interesting video session today because I did a lot of work today. I was working overnight and I got a lot of graphs and other things which I shared. So check it out. Thanks and have a great day, guys. Thanks for joining me. This is making my day really good. And I get a sense of community out here. Thank you so much. Bye.